Hello, everyone. You are very much welcome to yet another promising session on our morning live show. And I hope we are good to go this morning. If you can see my screen and you can hear my voice clearly, will you please type in hi in the comment section so that I can get a positive confirmation that we are good to go this morning. The last 24 hours has been quite a little bit choppy in most of the pairs that we have been monitoring since the beginning of the week. We initially had some bullish traction where price action actually moved considerably well before during the later part of the New York session we saw some consolidation phase begin to evolve in the market, and this must have a reason why that has been. And definitely we want to be looking at this, looking at the psychological aspect of the market, reading the price action, using the market structure to understand what is really going on and how we intend to manage our trades and also look out for trading opportunity today. So with that being said, here we are going to be diving right into the business, and I hope you watched my publication during the course of the weekend, which I have the link in the detail box below. You see, one thing about watching those videos ensures that you understand the background knowledge of how we got to the point we are on the 1 hour time frame. And another thing that it helps you to do is that it makes you to be able to make your individual decision, as you already have an holistic perspective into what is really going on. So it's not that you are just following me to the letter on what I'm saying, but you can also use your own discretion to identify potential trading opportunity as well. So try to watch those videos. I have them in the description box below, and there are timestamps in those videos too as well, which you can easily navigate to whatever area that is of your interest. So with that being said, here let's dive right into the business. I can see your comment, Bisky. Good morning to you. Akshay Hamin, good morning to you. Chatcom, all right, good morning to you. I hope I pronounced your name correctly. All right, so let's dive right into the business this morning. So the first thing we are going to be doing here, you know what we do. We want to check the economic calendar to see if we have any high impact macroeconomic event that we are going to be looking forward to today. You know how important these events are. We need some liquidity, we need some volatility, we need some price movement, and hence this events serve as a catalyst to drive price action. So if we understand that we have an event today, then definitely we are going to be using the market structure to understand how to position ourselves in such a way that we can catch any of this potential opportunity. So with that being said, here let's dive right into the economic calendar. And today is Wednesday, April 19th, and we have if we are considering the instrument that we have been monitoring since the beginning of the week, we are supposed to be looking forward to events that will be affecting the pound sterling, the US dollar, and then the Japanese yen. And what we have today, Wednesday, April 19th, is the consumer price index, and that is going to be affecting the pound sterling. And I think we are already seeing some traction in that regard, and we shall be looking at that in a detail. So the consumer price index is a measure of price movement by the comparison between the retail prices of a representative shopping basket of goods and services. This is a key indicator into the measure of inflation and changes in purchasing trend. So it also gives us a clue into the inflation rate in the country. So we have the previous data of 10.4% here for the previous month, that is the month of February, and the consensus was projecting a 9.8%. And look at what we have here has the actual data coming in at 10.1%, which is quite on the high side, coming in with a positive variance of 0.90. So we are going to be looking at how the market has reacted to this event on the chart, as we're going to monitor the price action on that one. And beside the consumer price index for the UK docket, we don't have any other macroeconomic, high impact macroeconomic event today. But one thing I would also like us to look at here is to dive in a little further into the medium impact macroeconomic event. Let's see if anything is going to be coming in from the US dollar and the Japanese yen. And looking at what we have here, let's give some time for the chart to load up. Hold on a second, please. All right. Okay, so here we are. Hold on a second. I'm trying to high medium. Okay. So we apply the filter and then look at what we have here. So we have the export import data from the Japanese yen. We also have the merchandise trade balance, which is coming much more later in the day. So we are going to be seeing some traction in that regard too as well. Then we also have Fed's pagey book, which always reports on the current U.S. economic situation through interviews with key business contacts, economics, market experts, and other sources. So this is one show people will also want to look at, so we can have a deep insight into the health situation of the U.S. economy. So it's not really that an high impact event we want to be looking forward to. So let's keep what we have on the pound sterling, and let's dive right into the current market structure. So as usual, the first commodity we are going to be looking at this morning is the US oil. And since the beginning of the week, we have noticed how the US oil commodity has continued to find lower lows and lower highs in this market. And this was actually not expected at the beginning of the week, as we were looking forward to a bullish momentum considering what has been happening the last couple of weeks. And we also took into consideration the OPEC Plus decision a couple of weeks ago to cut oil production by 1.6 million barrels per day. Though this will be effected in the month of May, but the news of this cut in oil production was so massive that it caused a ripple across the market. And we saw what happened prior to the beginning of 2 weeks ago. We saw that huge bullish gap, which took about 49 pips before the market went into a consolidation phase. This was detailed vividly in my publication on the US oil, so you might want to watch the link in the description box to see what I talked about there. So for the sake of this session, we are going to be dissecting the 1 hour time frame. So we are going to be looking at what is really happening on the 1 hour time frame since the beginning of this week. Now, if we dissect the current structure here, the first thing that happened on this chart at the beginning of the week was the fact that price action was initially caught within a consolidation phase here between the $82.60 level and the $82.20 area. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of the channel to the upside or break down the channel to the downside. And in fact, we had our first sell position triggered for the week after citing the breakdown retest of the structure at the $82.20 level to signal that bearish move that we have been enjoying since the beginning of the week. However, during our live session yesterday, we had new technical structures that we were supposed to be using to guide our trading activity for this week. And one thing we initially saw yesterday was this bearish trend line. So after we connected the series of lower highs, we had this beautiful trend line figured out. And what we decided yesterday is that we are going to be using that trend line as our yardstick for trading activity. And what does this simply mean anyways? Well, what this simply means is that as long as price remain below that trend line, we shall feel comfortable in our sell position. But if at any point in time we cite a breakout of that trend line, then this could be a sign that the trend line may no longer have the capacity to continue to hold that bearish momentum. And as at yesterday's live session, we had a situation. This was where we were during the live session, where we had another sell position to the previous 3 positions that we had at the beginning of the week, as price action moved about, how many pips was that? Moved about 100 pips in our favor before this bullish momentum began a couple of hours into the New York session yesterday. And if you remember what I said a breakout of that trend line will definitely be a beautiful signal that we are going to be going bullish. And we saw the breakout of the structure. Remember, we said we are not jumping right away, as we want to see the breakout retest of that $81 MAC level before we are going to be thinking of buying. We actually had a buy position triggered, and it didn't last for about 3 to 4 hours before we were taken out of that position. And if you had secured your position as soon as price moved about 40 pips thereabout, it moved, let's see, about 50 pips thereabout, it moved. If you had moved your stop loss to your entry point to secure the current position, as I advised on my TradingView platform and the Telegram platform as well, you would have been taken out with break even or small profit, or at break even in that kind of scenario. Then I also mentioned here yesterday that if price action drops below that $80.60 level, we might be in for another wave of bearish momentum. So for the sake of clarity here, I would like us to run through my publication on the USOil, that is on the TradingView platform. Let's see how we did the update on this commodity. So this was our first sell position for the week, as we rode the move all the way to the downside. Now this was the channel we identified during the live session yesterday. We were looking forward to more selling opportunities as long as price remained below that bearish trend line. Then we continue to guide our bearish move, and not until the breakout of that trend line happened that we start considering to buy. So I said here, price action takes out all the sell position as buy pressure resumes. So breakout retest of the $81 level will welcome buying opportunity. So unfortunately, we saw the breakout of that structure happen, had a buy position triggered, and I think I shared an update on my Telegram channel, I guess. And we had a breakout, though price didn't move significantly well. It moved about 50 pips before we were taken out of that position. It's okay if you have taken out in a loss, that is, if probably price action took you out in a loss. We have been profitable so far this week, and we still have more potential of more selling up, of more opportunities today as we continue to monitor price action. So right here, I said if price action drops back below the $80.60 level, we might be in for another wave of bearish momentum, and definitely the breakout of this trend line would have turned out to be a false breakout. And I hope you had your sell stop order below the $80.60 level and the $80.35 level as projected on this chart. And look at what we have here during the early hours of today. We saw our price action has broken down of those two structures to trigger two sales positions for today. And if you are taking advantage of that move, well done to you. Kudos to you for being on standby to have caught that move, as if you are taking at least the first one, you will currently be running with about 95 pips in profit. And if you had the second one here, you will be running with about 71 pips in profit. Then I also said we should take advantage of that $80 level too as well. So a sell stop order below that structure. If you are taking the $80 level too as well, you will currently be running with about 40 pips in profit. So kudos to everyone who has been part of this profitable journey, and you all know what we do right now. As soon as price action moves in our favor, we want to secure the current position by moving our stop loss, lock in some profit, and let's see how far this move is going to go. So at this point in time, the most appropriate area I think we could lock in some profit at this point is somewhere anywhere right above that $80 mark. Let's give room for price action to breathe. Let's see how far this momentum is going to go. For me personally, I've not seen this as a profit. I still need price action to break down that $79.50 significantly well for me to start banking on the profit I have made so far. For at this point in time, my stop loss will be at my entry point, as I'm still looking for that significant move to confirm that sellers are still very, very strong in this market. So personally, I will be having my sell stop order at the entry point, but you could have it at the $80 mark if you really need to lock in some profit just in case price action takes us out of this position. So with that being said, here we have locked in our profit. Congrats to everyone who has taken advantage of this opportunity. Now, what is going to be our plans for today? And for those who had missed out on this opportunity, do we still have any chance of joining or being part of this bearish potential move to the downside? Or are we going to be having a reversal situation that will incite the spike of a bullish momentum? So these are the things we are going to be looking at in a moment. So what we are going to be doing right now is to do some readjustment into our chart. Then I will be doing some deleting here so that we can have a cleaner chart at this point so that we can see things more clearly. So I will be deleting this one too as well. Hold on a second, please. Then I will delete this one. All right, so this one too is not needed anymore. Okay, so what we are going to be doing now is to acknowledge the bearish momentum since the beginning of the week, and to do that we want to bring out our line chart. We want to connect a series of lower highs to acknowledge that bearish momentum. So what I'm doing right now is to run this through the lower highs. So we have a trend line that we can use for the remainder of this week. So we have, after connecting the series of lower highs, so you can see that we have a readjustment to our previous structure. So we have something like this. So price action has consistently respected that trend line. So for those who had missed out on the sell position we had during the earlier hours of today, there is still a chance that price action could still come back, do some retracement back into the trend line, where selling pressure below the trend line here, or price action retesting that trend line, will give us an opportunity to join a trend continuation to the downside. So I'm not worried about this buy pressure that we are observing right now at the $79.50 level. Then before I go into the details, I want us to see how important that $79.50 level is in comparison to the current market structure. And in order for us to see that one, we want to scale up a little into the 4 hours time frame, where we identify the simple setup at the beginning of the week. Remember, we saw the situation here at the beginning of the week where price action has been trapped between the $83.40 level and the $79.50 level. And the $79.50 level had been a very strong selling niche in the past. If we go to as far back as 2 weeks ago, we saw how that level was so strong that sellers found it difficult to break down that structure. And right now we are back at that level, as price action is currently trading around the $79.50 level, giving us a clue that we might be having some bullish momentum spring out from that level. So that is why I said we should ensure that we secure this current position, as anything could actually happen. So on this level here, you would agree with me that we are at a critical point in the market where we could see buy pressure resume again around the $79.50 level, considering the fact that this level has been a strong buying niche for participants in this market before. And if the appearance of buy pressure resumed along the $79.50 level on our lower time frame, we would have no choice than to start thinking of buying the US oil, where the breakout of that trend line which has been supporting the bearish momentum since the beginning of the week will be a beautiful signal for us to add more position to our existing trade, hereby joining that trend continuation to the upside. So that is one scenario we are going to be looking at when we scale down to a much more lower time frame. Then another thing we are going to be looking at here is the potentials of sellers breaking down that support line at the $79.50 level, which will happen to be the first time price action will be breaking down that structure in the last 2 to 3 weeks. And if that happens, definitely this is going to be a beautiful signal that we might be going bearish. And if that is going to be happening here, I would rather see this as a retracement of the previous impulse leg. If I zoom out a little further into the structure, you would agree with me that after considering this impulsive move that brought price into the $83.40 level, a retracement phase at this juncture seems long overdue, where a breakdown of the $79.50 level has a high tendency of inciting a retracement, which we don't know how far it's going to be going at this point in time, but we could be looking at the area between the 50% and the 78.6% of the previous impulse leg. So for the sake of clarity here, if a breakdown of that $79.50 level happens, let's run our Fibonacci retracement tool through the previous impulse leg here, and we shall be aiming at an area between the 50 and the 78.6% of that previous impulse leg. So this area now will be serving as our potential TP target for sellers. That is, if we are joining that retracement move to the downside, and this area also will be a potential buy zone if we begin to see buy pressure resume around that level. So let me put this right in the center, and then we give that box a yellow color to make things a little bit clearer. Then we delete the Fibonacci retracement tool. So here we are. So what I'm simply saying here is that if price action ever breaks down, retests that $79.50 level, we're looking out for selling opportunities where our TP target for that move will be between the $75 level and the $70.35 area for our TP target, where anything like a reversal pattern appearing around this area we shall be getting ready to join the second wave of that bullish momentum. So that is what we are going to be looking at from this current market structure on a long-term perspective. So if you are a positional trader, you're a long-term trader, then definitely we want to be selling below the $79.50 level, looking for a TP target around that zone between the $75 and the $71 level. Now let's go back into our 1 hour time frame to see how price action has been reacting to the $79.50 level on a much more lower time frame, and it's most appropriate that we go to something even more lower like the 15 minutes time frame. Now right now we are on the 15 minutes time frame, and look at what we have here. We have some bullish pressure resuming around this area, so we still need some patience at this point in time, as if anything like a reversal pattern start coming in like a double bottom structure, price action finding it difficult to break down the previous low, which is currently at the $79.25 level, then we have no choice than to look out for a breakout of the neckline of that reversal pattern to join a move to the upside. Don't get everything twisted at this point. It can look a little bit complicated, but let me assure you that I will be with you in the comment section on my public platform to give you an update if this happens, and how we are going to be anticipating an opportunity to buy from this current structure when we start seeing reversal pattern. And like I said earlier, a breakout of the trend line, which also shares a beautiful confluence with the $80.35 level, will definitely welcome an opportunity to join a massive move to the upside. So that is what we are going to be looking at here to join a bullish move. Now, talking about the sell momentum in this market, what if price action gets into that trend line and we begin to see selling pressure resume around that area? So if that is going to be the case, then we shall be getting ready to sell, and a breakdown retest of the neckline of a potential reversal pattern identified there will trigger that bearish move to the downside, and with a sell stop order below the $79.50 level, we shall be having another position triggered at that point. So we shall be on standby to catch that one too as well. Then what if price action does not climb up at all? That is, if price action does not climb up into the structure and instead it continues to find lower lows at this point. Well, for me at this point, I will advise that we have a sell stop order at the $79.24 level. That is this area here, which has been the lowest point in the last 24 hours. So the $79.24 level here. Hold on a second. Okay, so we have it here. So we could have a sell stop order below the structure and ensure that you can afford a stop loss of about 60 pips thereabout, which is about $79.90 level. Put a stop loss around that area, and let's see how far this bearish move is going to go from this current structure. So that is how we are going to be joining this if price action does not find its way back to do a retracement of that previous impulse leg. So let's be on standby to catch any of this opportunity, and be rest assured that I will be with you right in the comment section on both my TradingView and the Telegram platform to give you an update in that regard. So with that being said, here we shall be moving right into the next option. And the next pair we are going to be looking at this morning is the GBPUSD. Now, it has been a very quite interesting situation here we have on the GBPUSD, and especially following the CPI data that came in this morning, and we saw how the immediate reaction of the market to that report, as we saw an engulfing bullish candle bringing us right into that sell window we identified during the course of yesterday's live session. So we had a sell window around this area, which was after we used our Fibonacci retracement tool to run through that previous impulse leg that began at the 1.2550 level, as you can see here. So we aimed at an area between the 50 and the 78.6% of that previous impulse leg to identify the sell window. And what is the idea behind the sell window here? Well, following the impulsive move here, I was saying here yesterday that the bullish momentum we are seeing so far since the beginning of the week could turn out to be a retracement of that impulse leg, that as soon as price gets into that sell window, we want to look out for a reversal pattern like a double top structure, head and shoulder pattern, a situation where buyers are finding it difficult to break a high here. Then we might be seeing this as an opportunity to get ready to sell the GBPUSD, with the hopes that price action will continue in the direction of the prior leading price action. So that is the idea behind that sell window we identified here. Now let's run through the details of how the week began for us here. Then we shall be diving into what our expectations are for today. Now look at the structure here. This was how the week started. The week started on a bearish note as we had the resistant line situated at the 1.24200 level, as you can see here. So we saw selling pressure around that area. Then we had the support line around the 1.23840. We saw a little breakdown of the structure. Price climbed up into this level, and we had a sell stop order below our key level, which was sitting at the 1.240 level, which triggered our first sell position for the week. Then we had about we had price action moved about 50 pips in our favor before the beginning of this bullish momentum happened. And I told us all yesterday that if price action breaks out of the 1.2420 level, we will be looking out for buying opportunity, as this was our yardstick for trading activity yesterday. Anything above the 1.242 was the line that we are using to guide our buying expectation in this market, and with a stop loss right below the 1.240 level. So we had a stop loss of about 22 pips thereabout, and since then price action has been trading just above and around the 1.242 level, giving us a clue that buyers still seems very strong at this particular point in time. And I hope you are part of this move. As soon as price drop took us out of the buy position yesterday, we had another opportunity to have a buy stop order above the structure, and if you are taking advantage of this move right here, well done to you, as you will currently be running with about 28 pips in profit. So what I will be advising you to do, and you all know what we do whenever we have this kind of situation where price action had moved significantly well in our favor, you want to be moving your stop loss accordingly, lock in some profit while we wait out for more trading opportunity if the market permits us. So right now, moving your stop loss, secure your current position, and what is going to be our plans for today? Well, the thing I will do right now is to readjust this trend line so that it can suit this current structure. We know we have to evolve with the price movement, so things has changed a little bit. So let's bring out our line chart and do some readjustment to this trend line that you can see, to the higher lows you can see here. So we have a new higher low right now, so I will be deleting the previous one at this point so that we can contain our price has evolved in the last 24 hours. So bring back my candle chart right now, and this is what we have. So you can see how price action had consistently respected this trend line here. So what we are going to be doing today is to use this trend line as our yardstick for trading activity for today. And what do I mean by using it as a yardstick? Well, it's simple. As long as price remain above that trend line, we shall feel comfortable in our buy position, and at the same time we will continue to look out for more opportunities to add more buy position to our existing trade. So as long as price remain above the 1.2420 level and the trend line, we feel comfortable in a buy position. But if at any point in time this trend line is breached in such a way that price action breaks down the trend line, then at this point we might be in for the second wave of the bearish momentum that started last week. So if that is going to be the case, then the sell window around this area will now become very valid for us to be part of, and it's another sell off in this market. Don't worry, I will be with you in the comment section. So as soon as that happens, I will let you know how we are going to be preparing for that one. But at this point in time, since price action is above the 1.242 and the trend line, we shall be focusing on the expectation of adding more buy position to this trade. So we have a couple of structure we are going to be mapping out in a moment. So let's bring out our line chart, and then there is this high here that was broken to the upside. So we have it at around the 1.24450 level, which I want to map out right now, which will definitely be one of our yardstick for trading activity today. So we have it at the 1.24420, probably 1.2420. So let's label that 24420 level. Let's place it at the top right hand side of our screen, and here we go. So we have the breakout of that level. Then another thing here is that we also have a structure at the 1.24600 level as well. So that's another resistant line, which happens to be the highest point price action has been for this week. So we are going to mark that out too, as well, as it will also be serving as a yardstick for trading activity today. So we have this mapped out. Go back to our candle chart. Let's see if we are going to be having some readjustments. Okay, so here we go. So I think I will have to readjust this one to the 1.2 This was the highest point price has been. So we have it at the 1.24700 area. Okay, sorry, my mouse battery is almost done. Okay, so we have the 1.2470 level, which is the highest point price action has been. So now, since we have the highest point right now, and price action is currently trading around the sell window we identified yesterday, then what this simply means is that we are going to be using the structures alongside with the sell window to identify if price action has a tendency of finding higher highs in this market. Now look at the structure following the impulsive move that started after the CPI event from the UK docket. We saw price test a new high at the 1.247, and since then we have been witnessing selling pressure. So there are two things that could happen from this current structure. Price could transition into a reversal pattern where price finds it difficult to break the high here, hereby giving us a lower high. Then if that is going to be the case at this point, we might likely be seeing a reversal pattern anytime soon. And you all know what we look out for whenever we have a potential reversal pattern. You want to identify the neckline of that reversal pattern, and you know the neckline there will now serve as a platform that will confirm the validity of that reversal pattern, where the breakdown of that structure will welcome selling opportunities. So right now we can't tell if there's a reversal pattern yet. We still need some time for price action to gradually transition into a market structure that we want to be using to guide our trading activity at this point. So we need some little bit of patience at this juncture. Probably an hour or two, we could see some transition happen around this area. Then if it turns out to be that price action was unable to break that high at the 1.2470 level, then we start looking out for structure that will dictate a potential sell momentum, and we anticipate to join that decline to the downside. We can even join before the breakdown of this trend line happens if we start seeing structures here that reveals the tendency or the strength of the sellers in this market. So let's continue to monitor the structure here and see how things plays out. Now the other situation I would like to state here is the potential of buyers continuing to the upside, where a breakout of the 1.247 could happen. And if that is going to be the case here, because of this potential here, I'm advising that we have a buy stop order above the 1.247, so that whenever that move happens, we can be part of that move. I'm of the opinion around this area that a breakout of the 1.247 at this juncture could be very, very massive. So let's have a buy stop around that area so that we can catch that move. And I'm of the opinion that if price could still go into a choppy situation between this level before we start seeing probably a breakout or breakdown of that structure. So let's become patient and don't let us get too compulsive about the situation. Let's be patient. Follow me on my trading view and my Telegram platform. I will be giving you an update as we continue to monitor price action on the GBPUSD. So that is that on the GBPUSD for today. Let's keep on monitoring price action. For those who already have a buy position running, secure your current buy position while we still monitor how price action will evolve in the next couple of hours. If you have any question, let me know right in the comment section. So moving on now, we shall be moving on into the next commodity, which is the XAUUSD. And on the XAUUSD, we've been having some profitable situation, though price action was at one point in time caught within a choppy situation where there was an indecision in this market, very, very prominent, that we didn't actually know where price action will be going. So let's run through how the week has started for us on the XAUUSD. So we have a simple setup here at the beginning of the week where price action was caught within this channel between the 2006 and the 1996 level. That was like a $10 channel before the breakout of this structure happened. So this breakout actually happened prior to our morning live session, and we said we are going to be looking forward to price coming back to do a retest of the structure, giving us some buy pressure on our lower time frame before we want to be joining that bullish momentum to the upside. But we said also that if price action breaks down the structure to the downside, we shall be looking out for selling opportunity. And to make things a little bit easy for us during the trading session, we were able to identify a simple setup on the much more lower time frame, like the 15 minutes or 30 minutes time frame thereabout. So we had a new chart for that expectation there, which was duly recognized on Monday. Yes, on Monday. So let's scale down to the 30 minutes time frame and let me show you that structure we identified there. So this was the structure around this area, and this was the Monday, was the breakout we saw at the beginning of the week. So we had the situation here where we said a drop down of the $2007 mark will be welcoming that sell position, and we were lucky enough to be part of that move. We also added more position at the breakdown of our key level. Remember the $2,000 mark, which was serving as our major key level at the beginning of the week. We also saw another breakdown of that structure, and we were able to scoop at least about 200 pips thereabouts on both position before that bullish momentum began during the later part of Monday's trading session. And we saw the situation here where price action had continued to find higher highs and higher lows, which I said yesterday could likely be a retracement of that previous impulse leg, that anytime selling opportunity could come in at any time if we see a breakdown of that trend line. And for the sake of clarity here, let's run through the economic calendar. Let's run through my public platform here where I made mention of how we are going to be anticipating our trading opportunity for the week. So this was how the week started for us, and this was the 15 minutes time frame I was mentioning earlier, where I identified a simple setup around the $2007 level, where I said a breakout of the $2010.50 level will welcome a buy position here. But if price action continues to respect this trend line, then a breakdown of the 2007 will welcome a sell position in this market. And look at what we had here. Price action moved in our favor significantly well, and we continue to ride the move all the way to the downside. We also mentioned here that a breakdown of the 1996 will be welcoming more sell position, and as you can see here, price action continued to drop to the downside. And during our live session yesterday, I told us all that price buy pressure resuming above the $2,000 mark is more or less a sign that we could be going bullish. So we want to see price do a retest of the $2,000 mark, buy pressure resume above that structure, then we look out for buying opportunity. Now the reason behind all this is the $2,000 mark we identified at the beginning of the week was actually our balance for the week, where we said price action trading above the $2,000 mark will give us an opportunity to buy, while price trading below the $2,000 mark will give us an opportunity to sell. This was mentioned at the beginning of the week, so it was a guide for us to be able to position ourselves even if I'm not around. As soon as you see price action finding buy pressure above the $2,000 mark, like multiple rejections where sellers find it difficult to break down the $2,000 mark, we look out for buying opportunity. And if price breaks down, we look out for selling opportunity as well. So we had a buy position triggered yesterday above the $2,000 mark. Right, price action trading above the bullish trend line. We moved our stop loss to secure the current position as we continue to add more positions, had the breakout of the $2007 level. And look at what happened during the early hours of today. Remember, I told us all here that we should be having a sell stop order below the 2001 and the 1996 level. So during the course of the night, we had price take us out of the buy position, and then we had our sell stop order triggered, had the $2,000 mark and the 1996 level. I also identified another structure here during the early hours of today at the 1987, where another breakdown of that structure should be welcoming another position in this market. And let us go back into the live chart to see what has happened so far. Now look at what has happened. We had the 1987 broke into the downside, and at this point I had my own TP target at the 1978.50, and at this point I must have been taken out of my position. But if you still have a running position right now, it is most appropriate that you move your stop loss to secure this current position. And the most appropriate area at this point to secure this position is at the 1987, as we want to give room for price action to breed, with the hopes that price action will continue further to the downside. So now that you've locked in your profit, now you've locked in your position, and for those who are actually taking their profit, well done to you, kudos to you. And for those who are still holding on to their position, it's okay. Just ensure you move your stop loss, secure this current position as we look out for more opportunities. So at this point in time, what is going to be our next line of action for today? And for those who have even missed out from this opportunity, what plans do we have? Do we still have more opportunities to sell, or do we still have more opportunities to buy in this market? So the first thing I would like to do here is to do some little readjustment with this chart. So I will bring out my line chart at this point. I don't think we need this anymore. Do we? We don't. Now we have structures here. Remember, this is the $2,000 mark, which is still going to remain on our chart as long as this week is. It is our key level, and we already have a breakdown of that structure to emphasize the strength of the sellers at this point in time. Now, with the situation we have here, we already have price action breaking the previous low here, which is another sign that projects the strength of the sellers in this point. So at this point in time, we want to be looking for more selling opportunities, but one thing we want to do here before we join another sell momentum is to wait for a retracement to happen, and this might likely come in the form of price action doing a retest of the 1987 before the trend continuation to the downside happens, or it may even go as far as the 1996 or the $2,000 mark before another wave of selling pressure resumes in this market. So these are the things we are going to be considering at this particular point in time. So for those who had missed out on this opportunity, I would advise you to remain patient right now, as we want to see how price action will be playing out from this current structure. So we have the lowest point for the week right now at the 1976.50, which I want to duly identify and map out so that we can also use this as a yardstick for our trading activity for today. So we have the 1976.50 level right here. So we have it around the structure. So a breakdown of this level too will definitely be another opportunity to sell. So you could have your sell stop order below the structure if you can afford a stop loss of about 90 pips thereabout. If you can afford that, have your sell stop order below that structure. But if you cannot afford a 90 pip stop loss, I would advise you to remain patient for the breakdown of that structure to happen. Then look out for a retest where selling pressure resumes, buyers finding it difficult to climb up. Then you could actually have your sell stop order below the 1976 and have your stop loss anywhere above the structure around the 1984, which will be dovetailing to about 50 pips thereabout stop loss at this point. So that is what we are going to be doing if price action breaks down the $1976.50 level. But since we have buy pressure here, look at the nature of the last candle here, we might likely see some retracement phase happen. So we want to see how price action will react to the 1987 or the 1996 to now determine if we are going to be joining a trend continuation from that structure, or from the structure. But I will be with you in the comment section on both my trading view and my Telegram platform to give you an update on what I think will be happening around that area. So that is that on the XAUUSD. Ensure if you have a running sell position at this point, secure your current position, move your stop loss, lock in some profit, and let's see what will be happening in the next couple of hours. I will be giving you an update in the comment section on my public platforms. Now let's move on to the last pair for today, which is the USDJPY. And on the USDJPY, we have a massive buy position triggered at this point as price action has broken out of those structures. So this was what we talked about yesterday on the USDJPY. I was having network issues on this morning, so I wasn't able to upload the update on the USDJPY. So this was what we saw at the beginning of the week on the USDJPY. So we saw how price action was initially trapped within that range between the 134.200 level and the 133.710 area, and we had our first buy position at the breakout of the structure. We saw price drop to the downside here. Selling pressure resumed below that structure. We had a sell position which I informed us all to secure as we saw buy pressure resume around that area. And during the later part of yesterday's trading session, I told us all to have a buy stop order above the 134.200 and the 134.550 level, and if you had done so, you would have had two positions running at this point, where the first position will be running with about 66 pips in profit, and the second position will be running with about 33 pips in profit. So for those who are taking advantage of this opportunity, kudos to you for being on standby to catch that move. And at this point, you all know what we are going to be doing. We are going to be moving our stop loss to secure the current position, and I think the most appropriate area is an area around the or above the 134.600 level, as we have a structure here. So above the 134.600 level seems most appropriate to secure this current buy position. For now, for those who had missed out on this opportunity, for now I will just tell you to lay low right now, and let's wait for another opportunity to join. So for today right now, we have a key structure we shall be using to guide our trading activity, which is the 134.550 level. As you can see, we already have a structure broken to the upside, and from a theoretical expectation, we want to see price action come back to do a retest of that level, where the resumption of buy pressure on our lower time frame will incite another opportunity to the upside. So that is one scenario to join a trend continuation here. Then another thing that could happen here, after price tested the 134.950 level, we could see a little choppy situation around this area, where price action could either evolve into a trend continuation pattern at the breakout retest of the 134.950 to the upside, or we could see breakdown of the structure to incite a retracement to the downside in anticipation of a trend continuation to the upside. So on the USDJPY, we will remain bullish here. We are looking forward to buying opportunity here, so I'm not considering selling at this point in time. We are looking forward to buying opportunity, but if anything unusual happens along the line, be rest assured that I will be with you in the comment section on my public platform to give you an update on what to look out for. And it's on this note I would like to call it a day. It has been a wonderful moment with you guys, and in fact I'm looking forward to a positive Wednesday, as we had beautiful structures that has a high chance of giving us profitable trades for today. So let's see what happens in the next couple of hours. I will be seeing you in the comment section on my public platform as we continue to monitor price action. Do have a wonderful evening, everyone, and I look forward to seeing you as usual tomorrow as we prepare for the Thursday's live session. Do have a wonderful day, everyone. Happy trading day to you, and bye bye. ṣe bí bọ́bá tá a sọ̀rọ̀ níjọ́ yẹn 115 ni mo sọ 115 ni mo bá yín sọ tẹ́ fi kúrò mo sọ pé 115 mo sọ 115 mo dẹ̀ kọ́ sórí pépà yín bẹ́ẹ̀ yẹn mo ní 115 mo kọ́ sórí pépà yín tẹ́ bá wo pépà tí mo tẹ̀ mú wá jẹ́ mo kọ́ sórí ẹ̀ pé 115 bọ́tẹ́ ẹ̀ sọ kọ́kọ́ níjọ́ yẹn nà ọ̀gbà tá à ń lọ tẹ́ ẹ̀ ń tà ń lọ. máa fi 5,000 kún á jẹ́ 120. Gbálẹ̀ máa bẹ̀rẹ̀ ṣẹ́. Ìgbálẹ̀ máa bẹ̀rẹ̀ ṣẹ́ máa fi size àbáyọ̀ nígbìyà. Ẹ̀yin kọ́kọ́ lè máa gbẹ́lẹ̀. Ẹ̀yin kọ́kọ́ lè máa gbẹ́lẹ̀. Ẹ̀yin kọ́kọ́ lè máa gbẹ́lẹ̀. Lè máa fi sìmẹ́ǹtì sí. Tẹ́ ń gba workmanship kìíní. Ìgbálẹ̀ máa gbé irin wá sórí site. Èní Wednesday lè ní o Wednesday lè ní o Saturday lọ́hùn lọ. ẹlòmí bíríkì ọmọ akẹ́kọ̀ọ́ bíríkì ọmọ báyìí a máa pè mí báwo ni ẹ̀yin ẹ̀ṣọ́ ẹ̀yin kẹfẹ́ ṣiṣẹ́ bí ẹ̀ṣẹ́ ti pọ̀ jù fún yín gan-an ẹ̀ṣẹ́ ti pọ̀ jù fún yín gan-an.